Hello, everyone, and welcome to the Your Mark on the World show. We're producing this episode for GoodCrowd.info, and we're thrilled to have as our special guest today Todd, who is the CEO and founder of Seed Equity Ventures, our sponsor. Todd, welcome back to the show. We're thrilled to have you again.
Thank you, Devin. Happy to be here.
Todd, last year you looked at hundreds upon hundreds of deals. I think you told me 600 submissions maybe, and you put 8. I think you said on the platform for funding. You're very selective, and so I thought it would be fun today to talk about your selection criteria. And you provided a short outline for us on that, and so we've got a little bit of a framework. But I'm excited to go through these. It's not a surprise, most investors use a similar set of criteria, but your first criteria is proven management. Tell us a little bit about how you vet management.
Well, thanks, Devin. As with any business or enterprise, I really it starts from the top down, and we've looked at companies that have and actually invested in some companies that were first-time entrepreneurs, but we really look at companies that have had, and founders that have had success in the past. And, part of doing this, more than once means that you've kind of been through the school of hard knocks, and our hope is that you've learned through previous startups or companies that a person's run. And then, then as we look at the new venture that they've started, we can take a look at the depth of their experience and the successes and failures they had in the past. And while that's not a guarantee for any future outcome, it sure gives us an idea about type of individuals we're dealing with and what kind of drive they have to see this through to the finish line.
You say successes and failures. It's relatively easy for us to understand how you look at successes. How do you look at failures? What are failures that make you feel good about a CEO or a management team member? And what are failures that give you concern? Is there a way to distinguish one from another?
Well, I think there's nothing wrong with not being successful in a venture. And as long as you're honest with your investors and employees, and we're truthful in your presentations, I think what we would take issue with is, as we do our background checks on individuals, where maybe they try to pull the wool over somebody's eyes regarding some projections that were not realistic, and overpromised and underdelivered. And so we try to distinguish between those two.
So special, red flags might include allegations of fraud coming either from a government entity or from one of the past investors, that kind of thing?
Yeah, exactly. So, so part of the due diligence process, if we get further along in the deal where through due diligence, we like the management team, we like the market. On the surface, it looks interesting for us. Then we hire a third-party outside firm that does a background check on the founders, the officers and directors, and large shareholders of the enterprise. And based upon that background check, we can find out a lot of information. And we're particularly looking for any either allegations or convictions for fraud. And we have come across a company in the past that we were quite excited about it when we found out that there was a problem with the SEC in one of the founders' pasts. They could have been invented a cure for cancer, and we still would have passed. So while the company was exciting and had great traction, that's a line we don't cross when we come across that.
Yeah, great illustration. Your next criteria is to look at the market. Tell us about market size, what are you looking for in terms of minimum potential for scale?
Yeah, so if the market is, say, if the founders identify a market of, say, $10 million, and we think that we can get 50% of the market share, that might be a nice business, and maybe a lifestyle business that you can have and support your family with. But that wouldn't really meet the criteria that we're looking for. So we really try to find companies that would, they're trying to address a market in excess of $1 billion total addressable market. And as long as there's that, potential market share out there that they can try and penetrate and get, percentage points of that market, then that's one of the criteria that we look at.
That's really helpful to understand that. A lot of times we used to talk about, you and I are old enough to remember when people would talk about $100 million marketplace or projections being adequate, but more and more it seems people are fixating on $1 billion threshold. Do people need that kind of scale to be successful on your platform?
Well, I don't think they need to be that kind of scale as far as what their projections are, but we'd like them to be addressing a market that it's a large market. So even with a 5 or 10% penetration, it could become a very valuable company.
Yeah. Now, business model. How does the business model enter into your investment criteria? How are you thinking about that?
Well, so as you mentioned, we saw about 600 deals this last year, and we've seen a lot of different business models, and just common sense will just tell us, we just turn off certain deals that we're looking at, and it's a pretty easy no right off the bat, just because of the business model. So I think the business model has to be plausible. If we can look in the marketplace to see, is this something that markets or companies or consumers, if they have purchased something like this in the past, or a service like it, or do we think that there's a need for it? So there's been some businesses where we've just seen a lot of interesting things, and some are really interesting and we're excited about, and some are less interesting, I should say, without being too direct. So
yeah, do you have an example of a flawed business model? I hate to ask that, but it would be so helpful to illustrate
Sure.
this point, because I think all of us struggle to understand, what investors are looking for sometimes.
Well, we've there's a lot of interesting ideas out there, and it's not to say that we're experts in the universe of good ideas. I'm sure we passed on some ideas and companies that will hopefully be successful in the future. I think there was one that kind of sticks out where it was a perpetual energy source that you attach to a bicycle that never runs out of energy. And the video we saw, it had an assortment of Radio Shack wires and meters and things on it, and but if you just know anything about physics, it wasn't possible that there could be perpetual energy with riding your bike once in a while. So but we've seen a lot. Yeah, we've seen a lot of interesting deals. I think one thing that we tried to do is, because I've kind of been in the position where I'm starting a new company and maybe people didn't believe in me, and that's a dumb idea. And so we wish everybody well, and we wish everybody good luck with their venture, even if we're not going to support it or raise capital for it.
One of the things that you look for is traction, and this makes great sense. I mean, as an investment criterion, and I suspect every investor along the value chain from seed stage and even before and all the way through, the IPO or an acquisition, people are looking at traction. What kind of traction milestones intrigue you for a successful, as a successful sign of being a good seed round?
Sure. So what we're looking, and obviously a lot of these companies, they've just come out of an accelerator. Maybe they launched 3 months, earlier before we get a hold of them. They might have launched, 6 or 9 months ago, but we really want to see, because it's kind of the ultimate validation. If they're in the marketplace and they have 100,000 users or 1 million users, even without revenue, we can see what the adoption is of their product or service. And there's been a few companies that didn't have revenue, any revenue to date, but they had lots of traction and downloads and user interactions with their product. One of those was a company called Shred Video that came out of Y Combinator. So really good founders, great experience, really good domain experience in the video, music, editing space, and they came up with a really unique product. They got entered into and accepted by Y Combinator, and while they were in the last summer, while they were in Y Combinator, they launched and they had a few 100,000 downloads on their product, and now they're growing, and so we look at that type of traction. But we've also seen companies that SaaS companies that maybe when we started to work with them, they had $5,000 a month in monthly recurring revenue, and then it went to 20,000, and then it went to 30,000, then it went to 100,000 a month. So we've also seen that. So even if it's small revenue or even if no revenue, as long as we can see adoption in the marketplace is what we're looking for.
Fantastic. That's really helpful to help people understand where in this process you're investing. Now, your last of 5 criteria was an exit strategy, and it makes perfect sense. There's got to be some way for you to get your money and the investors' money back out. You don't do this for the sake of hanging a stock certificate on the wall. Tell us a little bit about what you look for as evidence that an exit strategy will work.
Well, as we talked, we've looked at a lot of different companies, and some of these businesses, they might be more of a lifestyle business where this is something that you're going to support your family with, in the long term. But and maybe it was mildly profitable, and it had limited growth potential, but it was profitable. If we can't really see where a larger company is going to want to buy this company to add it to their product or services, that's really one of our criteria. And I would think for the most part, the companies that we're looking at, our hope is that a larger corporation will come around, and and if they're competing in a segment, that they'll become a subsidiary of another company, or their services will be absorbed by a large company, and that's kind of our hope for these companies.
I guess at this point, your company is so young, you haven't seen any of your investments yet yield an exit, but you have seen some follow-on rounds, and those tend to be a sign, perhaps, of a coming exit.
Exactly. So there's been a few of the 8 deals. There was a company that we invested in, and we had investors come into this round too, called DemoChimp, and they've since raised a Series A round at at a higher valuation and raised, significantly more money than the seed round that we were involved in. And then there was a company that we invested in out of Hong Kong that last week just closed their Series C round, and they raised a $10 million at a $32 million pre-money valuation. And we were involved much lower than that. So while not an exit, it shows that, I guess it shows traction for our investment, that there's been sophisticated investors that are valuing the company at much higher valuations and investing in larger sums of money. So
those are great signs of progress. Are you looking at any particularly promising deals right now, or that you're getting ready to put out there?
So there's a few companies that we're working with right now. There's two medical device companies that we're working with, and then there's another B2B business technology company that we're working with out of back east, and there's probably two other really interesting deals that we're kind of in the process of due diligence right now. So still active in reviewing deals each day. We get 1 to 3 new companies a day that come in to fill out an application with us. So it continues to fill our pipeline with deals and process to review.
We didn't talk about geography as a screening criteria. Are there any geographies, international or otherwise, that are off limits?
Well, right now we've invested, most of the companies have been in the U.S. There's been one in Hong Kong and one out of London. We've had we've had other venture firms that we've invested with on these international opportunities. It would be hard for us to be the lead investor in an international deal at this point, but if we have a kind of a trusted co-investor that's has boots on the ground in that region and has really vetted the deal, that supplements our due diligence, that's interesting for us. But we were close on a deal in the Middle East that didn't quite happen last year, and so we look at deals internationally as well. Fantastic.
Well, Todd, are there any other updates you want to share with us before we wrap up?
Well, I think another milestone we hit this last week, we have entrepreneurs and investors now from 130 countries on the platform, and there's about 9,400 members that are registered with us. And then we have dozens of new deals that we're reviewing each month as well. That's probably the most interesting milestone, I guess, for this past week.
That's great. Well, Todd, we really appreciate you taking the time to be with us today. It's exciting to learn more about how you approach investing, and I look forward to catching up with you next month, and we can cover more of this ground, because I think it's really important for entrepreneurs to understand how investors think about these things. So I thank you for taking the time to share those with us today.
Well, thank you very much, Devin. Appreciate it.
All righty. Let's do some good.